This one is one of the most powerful swing trading strategies that you can find. I decided to make this amazing video, guys, because I know that many of you do not have the time to be in front of your charts. So once in a while I spice things up and I add a strategy which has to do only with the daily or the 4-hour time frame or even the 1-hour time frame. So in this occasion we are gonna be using only the 4-hour time frame. This is a very nice strategy. So be sure that you watch until the end of the video in order to find out all the specifics of this strategy. Let's begin with the video. And always before we begin with the video, I like making, let's say, an image, an overview of what we're gonna be seeing. Right off the bat, if you check this thing out, this image, you might say, okay, this is one of these fair value gap strategies that Chris is showing, but how is he gonna do it only on the 4-hour time frame? Is he waiting for a rejection? What is that he is waiting for? Well, things are very simple, but things are very different than what you might be expecting. Let's go on and proceed with the rules. There we go. As with all of our strategies, we go ahead and we are identifying our most recent leg in price action. Many times we are following the trend, so we are saying, as an example, if we have an uptrend, that the most recent leg here was that, and now it is this one right here. So in this move that I drew right here, your most recent leg would be this one right here, with this one being your break of structure and the continuation towards the upside. In the previous video that I made the previous week, we were following the legs and we were not saying, if you recall, that for example, if this breaks down, we are still in an uptrend and we are looking to buy. Rather, we were saying that if this happens, in the previous video, in the previous strategy, 15-minute time frame with 1 minute entry, go ahead and click on the top right of your screen right now. If you haven't watched the video, we were saying that we were identifying the most recent leg and we were looking in this occasion to short from here. So I have shown a bunch of strategies. In this occasion right here, it is nice if we go with the trend, but it is also fine if you identify the most recent leg. In this example, which is a bullish example, we have broken above this candlestick right here, the high of this candlestick. This is the highest point within this small consolidation. And of course, as you can see right here, this is our most recent price action leg. And the fair value gap is this area right here, with this being the third candlestick, the low of the third candlestick that created the fair value gap, and this is the high of the first candlestick that created the fair value gap. This is the most recent price action leg, as I'm showing with the blue arrows. Okay, bear with me, we also have some beginners in the channel, they also deserve to learn, so we need to say everything in detail, in great detail. So let's move forward. We identify, as I said, our most recent fair value gap. It is the blue area in the image. Many of you know about it. For those of you who do not know about it, a fair value gap is created by 3 candlesticks. In this occasion, this is a bullish fair value gap, and it is the gap, this untested area that you see. I will say it one more time. This is created from the highest point of candlestick number 1. This is candlestick number 1, and the lowest point in this occasion of candlestick number 3. This is the number 2 candlestick, the area that is untested. This is your fair value gap. Let's proceed with the next slide. Now, are we waiting just for price to retrace into our fair value gap, as we were showing with previous strategies? Because you might say that yes, we are just waiting for price to retrace, but how, Chris? This is just one time frame, the 4-hour time frame. How are we gonna do things? And by the way, speaking about how we are doing things, look at your screen right now. Those are our past results in the signals group. We are hitting above 80% winning percentage, taking only 1 trade per day. and of course I have all of the recordings of the trades. Everything is being done transparently in front of everyone. Make sure that you join us because you will not find those results anywhere else, and you will not find the transparency as well. And by the way, if you ask, but Chris, do you have records, a personal account? Yes, I have started with my personal account as well, so that when somebody requests in the future records, I will have the records, especially for my clients, of course. Okay, so let's move forward now that I have said that. Here we go. Where are we buying exactly? Because of course in this occasion we are willing to buy. Of course, this is a bullish fair value gap, this is a move up, we are expecting a continuation up. Are we buying here, or are we waiting for the retracement until here? And you will tell me, how will we know that the retracement is gonna take place until here and not here and not here? What is going on here? I said many times the word here, so let's move forward. As we said, this is a strategy that uses only the 4-hour time frame. It is very simple what we are gonna be doing, guys. Okay, the trick. What is the trick that I'm gonna show you with the next slides? And as always, go ahead in my website. I will leave the link to the written blog post of this strategy, which you can find in my website, and you can also download the PDF in the end of the website, so you can download this PDF and go ahead and study it alongside with the other PDFs that I have posted. Okay, so this now is the third video that I have a PDF for, and from now on I will include a written article and a PDF for every single video that I'm making. So the trick, let's move forward, is very, very simple, guys. What we are doing, as I said, this is candlestick number 1, this is candlestick number 2, and this is number 3 right here. Those are the 3 candlesticks that created our fair value gap, which is huge. All we will be doing, we will be placing a horizontal line and we will be extending it from the top of candlestick number 1. And this one right here is candlestick number 1. So all you do, you place a horizontal line on top of it and you extend it. Now, the fair value gap needs to be, it is as a rule that you need to have the fair value gap in order to do this step right here. Okay, this right here is going to be your entry, simple as that, this exact point right here. Simple, guys. Now, what about stop loss? The stop loss, because you might say I'm gonna place it below the low, it is gonna be a huge stop loss. No, if this strategy, if you use this strategy and it works out, because of course it will have losses, then you will place your stop loss below the low of candlestick number 2. You see, you extend this one to the right, and it is very, very easy to do on your TradingView platform. You just click, you hit the shift, and then you stretch it to the right, and you have a perfect straight horizontal line. Okay, and what about take profit? For take profits, you can either go for a swing high of the 4-hour time frame. Okay, you could have also targeted this one. Why is this a swing high? A high, let's call it a high, because for many people they only recognize this one as a high. I will tell you, because I like to include information for beginners also on all of my videos, here this is also a high that you could be targeting. Why is this one a high? Because this is higher than the high to its right and higher than the high to its left. So if I place numbers 1, 2, 3, number 2 high is higher than number 1 high and than number 3 high. So this might as well be your profit, your take profit. Of course, because this strategy specifically will have more losses than wins, I'm telling you right now, okay, you can go ahead and backtest it. Of course, this is Nasdaq right here, my favorite asset. and I'm trading it as futures by the way, but you can trade it as contracts for difference as well. I would go for this high or for fixed reward to risk, and I would prefer to go for a 3-to-1 reward to risk in these occasions. So here it is, here is your trade. This would have been your entry exactly, you would have been activated, especially on futures, because you get activated right to the tick. And here would be your stop loss, a little bit below, as you can see. Your take profit would be here for more than a 3-to-1 reward to risk. Done. The whole trade is done. But I wouldn't leave you like that. I will include a bearish example. Rather, I did include a bearish example in order for you to see the bearish situation as well. We will be going for example number 2, but first of all I see that I have yet another slide which is saying that if you would be taking profit at the swing high, this would be a 3.2 to 1, but as you see this ran for way more than a 3.2 to 1. Okay, now we will go to example number 2. And again, the one trade that I'm taking in the signals group with way more than 80% winning percentage, plus the entries that I'm gonna teach you, the additional entries in the one-on-one mentoring, then you will be able to get funded extremely easily. The results speak for themselves, and I'm taking every single trade live every single day. Okay, you will see the Excel sheet in the end of this presentation with the trades since I started using this strategy. Now, example 2. Again, we identify a most recent leg, or shall I say the most recent leg? I shall say that. The most recent leg here is this leg, this bearish leg. We see we have a break of structure. Actually, this was the lowest point by a bit. It doesn't matter. We have a break of structure right here. We have 3 candlesticks which created a fair value gap. There you go. After the break of structure, which happened of course with this candlestick, we have candlestick number 1, candlestick number 2, and candlestick number 3. And why did I put numbers on those candlesticks? Just also for new guys, beginners I shall say, who cannot identify the fair value gap. The fair value gap, guys, is the area, the untested area between, in this occasion, because we are interested in selling, in shorting, of course, we have a bearish leg. Then the fair value gap is the area created between the wick, the bottom of the wick of candlestick number 1, and the top of either the wick or the body or whatever it is of candlestick number 3, this gap that is left. Okay. Now, I will proceed. And where is the entry going to be? What did we say in example number 1? It is going to be, in example number 1, if you recall, it was the top of the wick of candlestick number 1. This was candlestick number 2 and number 3, and we entered here. Now it is the bottom, okay? The wick, or I should say the bottom. It could be a body, we don't care. This happens to be a wick, the bottom of candlestick number 1. We extend it towards the right. This is my entry. Okay, what about the stop loss? What did we say in the previous example that we were looking to buy? The stop loss was going below the low of candlestick number 2. Now, of course, we are looking to short, so the stop loss is going above the high of candlestick number 2. Okay, above the highest point. What about take profit? We can go ahead and hit a swing low. In this occasion, this one, this would have given like 1.7 to 1 or something, 1.3. I do not recall. But as I said, if I would be using this strategy, which I'm not, I'm using way better strategy than this one. But this is the free YouTube channel, and this is more than enough for the free YouTube channel. Then you would be going either for the low. Okay, this happens in this occasion to be candlestick number 3 as well. Or you would be going for a fixed reward to risk, which I highly suggest if you are to use this strategy, and I would go personally for a 3-to-1 RR. Now, in this occasion, the max reward to risk would have been a 4.6-to-1 RR, but again, you wouldn't know that, so going for a 3-to-1 is fantastic. Go ahead and do your backtesting, do not forget about that. Last but not least, as you can see, the results are fantastic. I am personally targeting this 1.3-to-1 RR, which is giving at the moment an 81% winning percentage, which is extremely high. But of course, the optimal thing to do if you are not using, let's say, a prop firm with a trailing drawdown, if you have a personal account with fake money always, of course, is to go for a fixed 5-to-1, 6-to-1, and until 8-to-1 reward to risk. This will give you 40% winning percentage. If you go for an 8-to-1 RR, it will give you only a 40%, but it will give you 3 times and more the wins that you will get with this thing that I'm applying right here. Okay, I'm personally comfortable with this one, and this is what I'm using. When you download the PDF, go ahead and click here if you want to join the services, or I have the links down in the description and in the comment section, of course. Go ahead and leave me a like. Those things take a lot of time for me to make those PowerPoint presentations, and as you see, I am explaining things to you even for the beginners and even for those traders who do not have the ability to afford the services. They can just use the free videos to succeed in the markets. So subscribe to my YouTube channel, leave me a like, tell everyone in your family to leave a like to Chris FX because he deserves it. He's transparent. I'm speaking in third person as if I'm Caesar or something. I'm not Caesar, I know that. Share it with all of your trading friends and all of your family. They might be interested in trading, or they might find it funny to look at my face. This is gonna do it for today, traders, and thank you all for watching. Until next time.